we're still just kind of stuck in this downward trend in interest rates. Everybody's kind of expecting interest rates to just make this big, massive drop. That's not going to happen. They're going to track the slowing of economic growth, and that's all that's happening. So if interest rates kind of get outside that rate of slower economic growth, they're going to kind of just work their way back, because interest rates are a function of inflation and economic growth and wages, right? So those are slowing down, but they're not dropping off a cliff yet. But here's what you need to know before the bell this morning. Over the last couple of days, we saw a big jump in interest rates. I'm getting a lot of emails like, oh my gosh, what's going on with rates? What does this all mean? Nothing. It's the end of the quarter. So you had the end of the quarter, so had a lot of rebalancing. Interest rates had a very big decline here, and we'd gotten very, very overbought. So remember, technicals on interest rates are inverted because as they work the opposite of actual bonds. We're going to look at bonds here in 1 second. But interest rates had got very overbought. And so, again, a bit of a reversal was not surprising here. And again, we're still just kind of stuck in this downward trend in interest rates. And again, everybody's kind of expecting interest rates to just make this big, massive drop. That's not going to happen. They're going to track the slowing of economic growth, and that's all that's happening. So if interest rates kind of get outside that rate of slower economic growth, they're going to kind of just work their way back, because interest rates are a function of inflation and economic growth and wages, right? So those are slowing down, but they're not dropping off a cliff yet. So that trend's still intact. We're back at the top of that trend right now. We're back on with that move yesterday. We are on a bit of a buy signal. So rates could kind of work themselves a little bit higher here over the short term. I don't expect there to be a lot of a move in interest rates. We may just kind of drift around this level for a week or two or three, kind of move this up. But again, rates are already back to very overbought levels. So again, not a whole lot of upside to move here in rates before we get probably another retest of these recent lows and potentially even set a new lower level, over the course of the summer. Now, that is one thing, right? So we saw this move in rates. Everybody's like, oh my gosh, what does this mean? Inflation's coming back, Trump's getting elected, whatever the excuse is. It's really just quarter-end rebalancing. Bonds had a big move. We had a lot of portfolio management that had to rebalance bonds and equities in their portfolios. So not surprising to see a little bit of that action there. But let's talk about specifically Treasury-related ETFs, because the move in Treasury-related ETFs was much larger than the move in interest rates. And that's because here's the move. This first move was the quarter-end rebalancing in Treasuries. We had a lot of ETFs getting sold for quarter-end rebalancing. That pushed rates higher in the short term. So that was that quarter-end rebalancing. But then yesterday, in particular, there was another big drop in Treasury-related ETFs, and that was larger than the move in the interest rates. And got a lot of emails about, oh my gosh, what is going on here? Why is there such an outside move? Does this mean inflation's coming? No. This was the dividend for the quarter, because every quarter, these ETFs, some do monthly, but long duration ones like EDV, as an example, Vanguard's long duration bond ETF, issues their interest payments on a quarterly basis. So this was just the dividend. This was the interest income of the bonds in the ETF being distributed to you. So in a few days, that distribution is going to show up in your account in cash, or get dividend reinvested or whatever. So again, be careful with these big moves that happen like this, particularly right at quarter end, because they can be deceiving about what's really going on. This is more of a fundamental thing that's going on right now than really just any type of economic analysis that doesn't really kind of jive with that. You're going to hear a lot of headlines, a lot of stories. This is just end of the quarter stuff. So just relax. It's fine. Long-term trends, economic growth, inflation, wages, that's what drives rates. Those are moving in the right direction as well. But that's what you need to know before the bell this morning.